Hi, this is David from the Home Loan Source. So I'm going to do a brief overview over the loan estimate, how to read the loan estimate every time a loan officer or a lender sends you over a quote regarding your refinance or a purchase, wherever the case may be. So the date issued is basically the date of the current date of the loan estimate, and then the applicant, that's where your name would go of the applicants, and then the property that's where your property address of your property you're refinancing or looking to buy. And then the estimated property value is the value of the home. They usually give you an estimate. So what we can do is you can always ask us to give you a comparative market analysis. You can either ask your real estate agent or your loan officer, and it's at no cost at all. So if you have any questions regarding your value of your property or find out how much it's worth, give us a call or email us. And then basically this application, this loan estimate, basically the loan term up here is your term of your loan. So let's say you're refinancing, you can either refinance back into a 30-year, a 25, a 20, 15, or a 10-year loan, or you can always refinance to an ARM as well, because you look at right here, this is a fixed rate. You can always refinance to an ARM, which is consists of a 3-year ARM, 5-year ARM, 7-year ARM, or even a 10-year ARM. It really depends on you. So in this case, this applicant is refinancing their property, and they're refinancing to a 30-year fixed rate. Now, if you're an adjustable, I recommend you, or interest only, I recommend you refinance into a fixed rate depending on your situation. And the loan type in this loan scenario is a conventional loan. You can either get a conventional FHA or a VA loan depending on your situation, based on your credit score as well. And the loan ID is basically just a 30-year fix. And then the rate lock right here, it just tells you if whether you locked in your rate or not. Okay, and then right here, this tells you what your loan amount is on your refinance or the purchase, whatever the case may be. So in this case, it's $358,000, which is the loan amount of the client. And then the interest rate they're getting is at 4.625%. And right here, the monthly principal and interest, that's their monthly payments, which is literally just principal and interest without taxes and insurance included. And then this is basically telling you there's a prepaid penalty and the balloon payment. And if you ever have any balloon payments, give us a call. We can probably help you out with that too as well and help you get out of that situation. And right here is the principal and interest, basically your monthly payment again. Basically, you're paying $18.40 and 62 cents. That would be your monthly payment. And the mortgage insurance, which is usually mortgage insurance, usually when you have FHA loan or a conventional loan that you have a loan to value about 80% or higher. Okay, and if you want to get rid of your mortgage insurance as well, give us a call. We can give you an estimate and consultation on that, how to get rid of your mortgage insurance. And then right here, your total payments. Oh yeah, escrow, estimate escrow. That's your tax and insurance included with your payments, with your principal and interest, and then your impounds, your taxes and insurance, which the total comes out of $21.92. That's your total payment for the month with tax and insurance included. And then right here, the estimate tax and insurance and assessments. This is your property taxes, homeowner insurance, which is actually $351, which is included, as you see here, which include your payment of $21.92. And then this tells you your estimated closing costs. That's how much the closing cost of what the lender would be with the loan officer. It would be $6,431, which includes the $3,026 in the loan cost, and plus the $3,405 with the other costs, which we'll go over in page 2, and whatever lender credit you have, whatever the lender is giving you. And the estimated cash to close is usually the case when you're cashing out. You're doing a refinance cash out. It's basically telling you it's a negative $15,000. That's what you're getting back, $15,000. Okay, so we're back in the second page. So the origination charges, usually this is a total of the A column right here. So usually you would see the origination charge, what your lender is charging you, or the lender is paying for your costs based on the lender credit. And the flood certification is about $12, and the loan origination fee. This person right here is getting a little bit of a charge based on the origination fee, based on the interest rate they're getting. And the underwriting fee is $945. So that's the A column right here. You add these up, it will be a total of $1175. And we move on to the B column. The appraisal fee is about $475. It really varies depending on your property value, and we really have no control over that. Usually, you would get your appraisal fee reimbursed after the loan closes, or I'm sorry, yeah. So basically, you would have to pay out of your pocket actually. And the credit report, you usually charge about $21 based on your lender. So that total of that right there comes out of $496 in column B. And then in column C, there's messenger fee, escrow fee, title, closing escrow fee, lender title insurance, and then notary fees and wire fees. So usually these would be the charges that we're charging for these fees right here. For the C column, your total is about $1355. And the D column basically tells you the total cost of A, B, and C column, which total of $3,026, which will be right here. Okay, and then we move on to the E column, taxes and other government fees, which is $125, which breaks down to recording fees and other taxes. That would be a total of $125. Okay. And then the F column, there's prepays of $460. That would basically be your home insurance premiums or mortgage insurance premiums, prepaid interest, about $45.99 per 10 days. Basically, the closing date was September 30th, and basically, but September 20th actually was the closing date, and then you close in 10 days. Then they'll be collecting 10 days of interest. Okay, and then for column G, the initial escrow payment at closing, which is $2,820, with the breakdown of that, basically your homeowner insurance and taxes. So you're basically paying $56 for 3 months, which is total about $170, and then the taxes $294 a month. It's 9 months. That's a total of $2,650. And then let me see here. So basically, in I, your total other closing costs, that'd be your E column, F column, and G column. The total of $3,405, which you see right here. Okay. And then the total of the closing costs, which we saw earlier, about $6,431, which is total right here, which tells you right here. That basically includes all the columns, about $3,026 plus $3,405. That'd be your total closing costs. To get the loan. And right here, so basically this person right here is cashing out about $15,000. That's how much they'll be getting for the refinance right here. Okay, and then down here, it really breaks it down for you, the comparisons. In 5 years, you'll be paying about $113,923 in principal and interest, and then the principal loan, you'd be paying up about $31,041 in 5 years. That's how much you'd be paying. Because usually, typically, if you're in a 30-year loan, you'd be paying double of your loan amount. So let's say you have a $300,000 loan amount. In 30 years, you'd be technically paying about $600,000 total. So most of the times, people would want to refinance to get into a lower term, to a 10-year loan or a 15-year loan, be saving a lot more money that way. Okay. And then basically, this tells you the annual percentage APR. This is not accurate at the moment. I had to fix that in the file. So basically, this tells you the total interest percentage rate, about 85%. Basically, if you're a 30-year loan, you're basically paying 85% in interest. Okay, and basically, this tells you the appraisal, assumption, homeowner's insurance, late payments, loan acceptance, liability after foreclosure, refinance, servicing. Okay, and if you were ever locked in with your current lender and you're not liking the service that you're receiving from your lender, you can always give us a call. You can always talk. You can always shop around with other lenders as well, unless you sign final closing docs. Then you won't be able to switch lenders, or else they would charge you a fee. But if you haven't signed final closing docs, then you can always switch lenders and shop around for the better interest rates as well. So you're not obligated to stick with them. And see here. So in this case, this person knows about $303,000 on their first loan, and their second loan, they had a second loan of $34,000. So they're combining their first and second together and cashing out $15,000 as well. So which comes out about $337,000. Okay, and that's your appraisal right here that you'd be paying out of your pocket. Okay. Perfect. So that's basically the brief overview of how to read a loan estimate. So you have any questions at all how to read a loan estimate, or any questions regarding refinance or a purchase, feel free to message us or give us a call. Okay. All right. Thank you so much for watching this video, and I hope you have a great day. Okay. Thank you.